Hey everybody, happy election day. Now, at the time that I'm recording this video, I have no idea what the day is going to hold, but regardless of the outcome, the federal estate tax, although it currently impacts only a relatively small percentage of people in the United States, is often heavily scrutinized around election time. So, in continuation of our estate tax minimization series, I thought today would be a good day to look at both sides of the aisle to see what changes may be coming or kind of a what could have been scenario depending on what happens today. Or, well, hopefully we have an answer of what happens, in the election before the end of the year. So, first up, we currently have a Republican president, a Republican controlled Senate, and a Democrat controlled House of Representatives. This Republican leaning government has resulted in a fairly high estate tax exemption amount, which is what's created the resulting small percentage of Americans whose estates would be subject to the estate tax. And I've detailed the current exemption amount of $11.58 million in previous videos. And at least currently, this amount is subject to increase again to $11.7 million next year. And again, this is oversimplified, but these numbers represent the amount that an individual can transfer free of the estate tax to the next generation. Any dollar over that amount is currently taxed at 40%. So I think that, if the election continues or if the election has a red outcome, if you will, things will probably stay kind of the same. It's probably unlikely, but a fair number of Republican politicians actually favor repealing the estate tax altogether. So if today's election does swing red, it's very likely that a bill to repeal the estate tax might be presented like it was in both the House and Senate last year in January of 2019. Those bills saw little action. They basically died in committee. But with each notch for the red, the chances of a repeal probably tick up just a little bit. So overall, Republican victories today probably mean more of the same in terms of the estate tax. But what if Joe Biden and a host of other Democrats swing this election towards the blue side? There are some great articles out there right now. I'm happy to share those with you that summarize the former vice president's tax plan. But again, we're focusing on just the estate tax right now and some of the related provisions. But there's so much more to these plans. So starting with the exemption amount, Joe Biden's plan would reduce the estate tax exemption amount to $3.5 million per individual. At least that is the proposal. And doing this acts to expand the estate tax so that it's going to apply to more estates, and thereby it should generate more revenue. His plan would also increase the estate tax rate from its current 40% number to 45%, which should also act to increase the revenue generated. But perhaps more impactful than these changes is the potential repeal of a step up in basis for appreciated assets at someone's death. So under current law, things like a brokerage account, the value of your brokerage account, if you were to pass away, that asset is going to receive a step up in basis to the fair market value as of the time of your death. And it's still unclear, at least to me, whether the Biden plan is going to allow the basis in that account to carry over to a beneficiary. I'm assuming that's the case, but if anyone knows otherwise, feel free to share that with me. So for now, let's just assume that someone has stock valued at $1 million. They bought that stock for $500,000. If carryover basis is allowed, the beneficiary of that $1 million worth of stock is going to pay capital gains tax on the $500,000 worth of gain. And now we're focusing on estate tax and some of the related provisions, but I will mention the capital gains tax. Under the Biden plan, capital gains would be taxed as ordinary income at pre-2017 levels for anyone making over $1 million. I think they're using the 20% rate for the middle part from $400,000 to $1 million. Have to double check that. But for anyone making more than $1 million, the proposal is to tax those capital gains at an ordinary income tax rate of the pre-2017 rate was 39.6%. So this is going to be in addition to the estate tax if that applies to a particular decedent. It's also important to note that in addition to your traditional view of what assets are, everything that you own, face values of things like insurance policies are something that you have to consider too. So if you have $1 million, $2 million worth of life insurance on your own life, you own that policy. That is included in the value of your gross estate as well. So a lot to think about there. So let's just, to play this out a little bit by way of an example, let's just say that we have an estate that is worth $5 million. Under Joe Biden's plan, the exemption amount, or again, using very simple numbers here, $5 million estate minus the $3.5 million exemption gives us a taxable estate of $1.5 million. If we multiply that by the 45% proposed rate, we're looking at an estate tax of $675,000. So $675,000 estate tax. Let's also say that that estate included that $1 million brokerage account we mentioned already. There would be a capital gain of $500,000 if a beneficiary sold that right away. That's going to result in an additional tax levy to the selling individual, the beneficiary, of $198,000. So as a result of somebody passing away with this size estate, not leaving a surviving spouse, not taking into consideration any of the deductions and those sorts of things here, basically there's going to be a $675,000 estate tax, $198,000 worth of capital gains income tax, for a total tax as a result of somebody passing away of $873,000 at the federal level. Under the current law, that really, none of that, there's a nominal or no tax as a result of these same provisions. So the federal estate tax wouldn't apply because the estate would be under the $11.58 or $11.7 million number. And with the step up in basis, there's not going to be any capital gains owed if it's sold right away or relatively close. Maybe there's a small capital gain. And I should mention that in the example I was using for the Biden proposal there, I am assuming that the individual made more than $1 million just to kind of show you the top tax. That's not necessarily the case. But as you can tell, regardless of the outcome of the election, there's always stuff to think about here. And it's just important to have a plan in place. So with these things in mind, I encourage you to, once the dust settles and we know what this election has resulted in, sit down with your advisory team. We're happy to talk to you, but sit down with your estate planning attorney and make sure that you're covered. Sit down with CPAs, financial advisors, to make sure that everybody's on the same page. Again, just important to know what provisions there are. So thanks for taking the time to watch this. Really do appreciate you guys checking these out. If you have questions about any of this, we're happy to talk through it. Otherwise, get out and vote, and we will see you next week. Thanks.